The world faces years of slow and subpar growth. That's the message from the IMF's Christine Lagarde, as she claims that the global economy is too weak for comfort and encouraged the European Central Bank to adopt looser monetary policy. But did investors mishear, as global stock markets were pushed to post-crisis highs on Wednesday? I'm Natalie MacDonald, and you're watching Thursday's press review on Dukascopy TV. While Lagarde maintained a world economic growth forecast of more than 3% this year and next, with a 22% expansion expectation over the next 5 years, speaking ahead of the IMF spring meetings in Washington next week, the managing director of the International Monetary Fund warned that the recovery was fragile and highlighted obstacles such as geopolitical tension in places like Ukraine and market volatility, reiterating previous comments regarding greater cooperation on matters such as the impact of Fed tapering, stating unless countries come together to take the right kind of policy measures, we could be facing years of slow and subpar growth, well below the solid, sustainable growth that is needed to create enough jobs and improve living standards into the future. However, the MD's warnings did little to dampen bullish stock markets in Wednesday's trading, as an employment report in the US indicated a labour market rebound following winter's big freeze, prompting ever-rising expectations of a large gain in Friday's NFP data. The S&P 500 sat at a record high at close of day on Wednesday, while the FTSE All-World Index closed on a pre-crisis high. Nicholas Colas of Convergex Group explains, in March, investors began to find their confidence about domestic growth and invested accordingly, both favouring equities as an asset class and individual sectors which should benefit from further expansion. Speaking ahead of today's European Central Bank rate decision, Lagarde also called upon the ECB to pursue more monetary easing through unconventional measures, as she warned that the global economy, the euro area particularly, are at risk of what Lagarde describes as lowflation, and urged more action by the central bank, warning that low inflation in advanced economies risks undercutting an already tepid global recovery. The stock markets didn't listen, but will the ECB? Ben Jones will be back shortly with a look at the European Central Bank rate decision, so do stay tuned to Dukascopy TV.